Good morning on this Wednesday. Yes, it's hump day as well, and it's Veterans Day, and it's an absolutely beautiful winter day outside here. Dropped about 6 inches of snow last night. It's absolutely white, a winter wonderland here in Minnesota. Depending on where you are, I keep hearing from other people it's 84 degrees down in Houston. I like to say hello to my commander down there, one of the great people. What a wild ride. The wild ride continues. On Monday, we were up 1,700 points in the pre. We finished up 800 points after dropping 500 points late in the session. Matter of fact, the last half hour or so of the session. But the interesting part was we look over at the NASDAQ, and holy smokes, we still finished up 800, as I say, 800 plus on the Dow. But on the NASDAQ side, we dropped 180 points. Well, fast forward to yesterday, and yesterday we started off the day pretty strong. We absolutely started to skyrocket late in the day. We were up 300 plus points, finished up 260 points, but look over at the NASDAQ, and once again, down 160 points. This disconnect, this movement, at least everybody's talking about that, and I just want to tell everybody this. Oftentimes you hear on TV these very general statements. Be very careful when you're listening to those, in my opinion. And my opinion is that it's an overstatement oftentimes to say everybody is getting out of growth and everybody's going over to this. Here's the key, I think, to the markets. Quality names. When quality names go on sale, that creates opportunity. A couple weeks ago, some very big quality names were on sale. Then we had that big week last week, that monster run to the upside. Well, this week we're starting off strong. NASDAQ's actually been getting hit pretty well. So one of the things that I brought up yesterday on the halftime report and again at the 5 p.m. is, you know what? There's still quality names out there. You want to buy quality when it goes on sale. And we'll be talking about some of those moves, but Microsoft, Apple, Amazon, Google, Facebook, you know the list. And today, a little bit different story than what we saw Monday and Tuesday. And a lot of the time, there's just some profit taking going on. Some of that makes sense, but that does create opportunity if you still are looking for the quality. So it's not always about going for these other areas of the marketplace for the wrong reasons, in my opinion. As a matter of fact, always listen to what Warren Buffett said. And what did he say? Well, it was his consistent line. It was always out there, and I've always lived by this. Blood in the streets, that's your opportunity to buy. It can't be more clear than that. But when you're buying, you're not buying everything. You're buying what is quality that's gotten dragged down with everything else. Anyway, let's move on a little bit. Volatility trading around 25. That's something that was pretty interesting yesterday. It was all about energy. It was all about industrials. It was all about materials. A little bit of financial participation. Goldman Sachs actually traded pretty well yesterday, but the rest of them either flat or down. It seemed like, the financials not having an unbelievable day. And keep an eye on these regionals and keep an eye on that 10-year. As the 10-year starts to move, we heard Chris Verone last night on the 5 o'clock show on CNBC talking about this. He's projecting that we might even see pretty significantly higher numbers than this. I'm not even going to throw those numbers out there, but all of that would bode pretty well for the banks, probably, it would seem. But the bank's already making a pretty nice move. If you look over the last week or even the last month, you've seen a pretty solid, stable, sort of a choppiness, but a move towards the upside. As a matter of fact, last I looked, the XLF was trading at some of the highest levels it's seen in many, many months. When it got up and over that 27. We've been talking about 25 as the magnet. Can we finally break away from that? We'll see if that is something that can come through. But yesterday, it was Boeing, it was 3M, it was Dow, it was Honeywell, all of those up over 2.5% yesterday. Those are your industrials. On the energy side, you had Chevron, you had Conoco, you had BP, all up 4.5% or more yesterday. We've been talking about crude. We've been talking about the energy space, and it has been performing. We've also seen an enormous amount of paper coming into the energy space in the derivatives world, in these option markets, almost all bullish, almost all just massive call buying across the board. Some of them in the services area, some of them in other areas, but specifically in the energy category. There's no doubt about that. Also materials. You got names like Freeport-McMoRan, you got Alcoa, you've got Nucor, all higher. Add Devon into this frame as well, and some of these other names, Marathon with the energy space as well. You get the idea. Materials, energy, that whole section having a pretty nice run of it. By the way, one of the big moves yesterday, we did not cover this nearly enough in my opinion, this Ulta deal with Target. And why is that a big deal? Because Target continues to make deals with other companies to be a part of and inside of and a partnership with Target. We've already got, obviously, Starbucks. We've got Levi's. Now add Ulta. And I got to tell you something, Ulta absolutely exploded. That says a lot about Ulta as well as a lot about Target. So just keep an eye on this one. Ulta yesterday was up about 7% on this news. Pretty nice move to the upside. So what was really pulling on the NASDAQ yesterday? We talk about this huge disconnect and how we've been seeing this and the NASDAQ going to the downside. Here are some of the names that really add to the list of what was really getting pulled on. Some of these names are, in my opinion, a little bit overdone, and that's why they're getting sold off to the extent that they are. Zoom, Nvidia, AMD, Xilinx, Qorvo, Win, CCL, you got American Airlines, you got Microsoft, Amazon, Facebook. All of those were down about 2-3% yesterday. Nothing big. Nothing to be overly concerned about yesterday, I don't think. By the way, volumes yesterday, extraordinary once again. Not nearly that 48 million, but we were a little over 34, about 34.5 million contracts trading yesterday. So another big volume day. And that always says something about the move to me. When you've got big major moves and you got the volume to support that, that says a lot more about that move than when you see the big moves on very, very light volume. That's not something we've been seeing. So let's jump into today. So early on, pre-market, Dow 170 points to the upside. NASDAQ actually starting to move to the upside, up 100 plus points. We get to the open, and suddenly we're up about 120 points. That's not unusual. Oftentimes the indications early on aren't exactly right. And so up about 120 points on the Dow, up about 100 points on the NASDAQ, up about 20 points on the S&P. Flat 15 minutes later, and suddenly Dow's up 55 points. You got a NASDAQ up 170 points, and you got the S&P up about 21. Now we are 30 minutes into the day. I'm just doing a quick refresh. I'm looking Dow now negative. It's down 19, call it 20 points. NASDAQ, on the other hand, up 160 points. So still holding on. It was just up 170 the first 15 minutes. Now about 37 minutes into the day, up 165 points. S&P right around 16 points. Volatility index going down. It's underneath 24 now today, down about 3%. So in the 24s, let's call it, in terms of the volatility index. We've been talking about this for a while now. Just a week and a half ago, it was 40 where it closed then, and that was a sign, and we talk about this often, and we talked about it that next day, which is when you get a close over 40, oftentimes it tends to, over the next couple of months, this is only a couple of weeks, but the next couple of months, that you would see gains in the market. And why is that? Because when you get hit like we did, and you get that big push to the downside, creates that opportunity. The smart money comes in, starts buying it, volatility starts to come out of it, and the markets tend to move a little bit higher. So that's some of the mechanics of what we oftentimes could see. So we'll see if that plays through as it has in the past. But Dow's had an absolutely magnificent first couple of days, so taking a little bit of a breather, does that make a little bit of sense? I would think so. We always have to think about this with some sort of a practicality when we're looking at it. So we were slipping, no doubt, on the Dow, and part of that had to do with the industrials for sure. Financials a little bit, but primarily the industrials. Industrials down about 1%. You look over at the NASDAQ, and you start to see what is really pushing this. This is really moving to the upside. Well, technology and semiconductors absolutely on fire. Skyworks, you got Zoom, you got NXPI, you got Nvidia, you got Adobe, you got KLAC 10 Core, you got Biogen, so the biotech space. Nice little bounce there. We know that's been a very volatile name. That was up 40%, had a pause, then down 30%, and then a little bit of a move to the upside. PayPal's been looking pretty strong. Qorvo, Qualcomm, so you get the idea. Semiconductors, and take a look at some of what's going on with the technology names as well. Technology was up about 1.7% before I came on with this on the take today for Market Rebellion. Apple, Amazon, Facebook, Google, Tesla, Microsoft, all participating to the upside today. Those are the names that you heard a lot of people come on TV say, hey, I think these names are overdone. We're going to continue to see this rollout out of that. I don't agree with that. I think when you talk about specific names, you have quality names. When they go on sale and they're down a specific percentage off of their highs, I think that's the time to start looking at them. And especially if we see some in the derivatives markets, some of the participation with some of the call buying and so forth, that absolutely gives you a little bit more comfort when you're starting to think about whether or not you want to dip in and either add or start looking a little bit harder at some of these names. So, little unusual option activity for you right now. I'm going to give it to you. Before I do, Dow down now close to 40 points, NASDAQ up 160, S&P up 14, VIX still right around now about 24. So the unusual that I've got for you today, Chinese stock, communication stock, social, entertainment, platform, the whole deal. Momo Yep, MOMO. It was trading 1485 when we saw the unusual option activity come in. A buyer of 5,000 November, the November 27th expiring, so 1 week after the third Friday. So November 27th expiring, the 17 and a half call. So these are call at $2.50 out of the money. They're only 25 to 40 cents was the price they were paying. About 5,000 of those traded. Really, really interesting to see this. And I'll tell you what, just kind of adds to sort of that tech space and the energy space, or not the energy, the tech space, the semiconductor space, and those kinds of names. We talk about Tesla, we talk about Netflix, and a lot of the time we kind of ball those into the tech space as well. Some of these communication type names, especially many of the Chinese names, oftentimes we find different categories where a lot of these fit in as well. Folks, you got to have knowledge. You got to have an understanding of the derivatives markets. You have to understand them because this is where the growth is. Hopefully you're educated. You're going to want to be educated because if you're not, you're going to have, you might get lucky early on, but after a while you might wonder what happened and what was the mistakes that you made. And a lot of that might have to do with some of the decisions that were made based upon not understanding fully what some of these different things, especially the pricing models that we talk about all the time. And we talk about this in terms of the Vega and the Theta and the Gamma and all the various things that go into the pricing model of options. It's not that complex, but it's something you definitely have to understand if you want to have continued success on a regular basis or a much more common basis. Doesn't mean everything's guaranteed. Doesn't mean you're not going to miss. I miss all the time. But at least you know why oftentimes when you've had some of those misses, you know you made all the right decisions, just didn't work out. And that actually is very comforting to know. So understand that. By the way, so many people yesterday, so excited about this new hat that the guys over at the Minnesotan, just about 5 miles that way, have out there right now. It's a nice, beautiful giddy up hat, and it's got this big black bull on the front of this black and white hat. It's gorgeous. You're going to love it. Definitely check it out. The Minnesotan, all of the gear there, all of the gear that is Market Rebellion style gear. It's the take, it's the bull, it's the giddy up, it's the shirts, it's the hats. They got the sweatshirts, they got the whole thing, and the winter hats now, the knit hats, those are absolutely awesome. This latest one, he's having a hard time keeping it on, so it's cool. He's absolutely getting flooded with people, so I encourage you to check that out as well, especially, even you don't even have to be in a cold weather climate. We've all seen it before. You see people in Hawaii walking around with stocking hats. Why not? They do have the baseball cap still as well. Folks, have a great day of trading. This is the Market Rebellion. The rebellion is taking over. Giddy up.